So it was a crazy day in the stock market yesterday. Dow started the day 500 points down, but ended the day, I think, only like 100 points down. And according to CNBC analysts, this has nothing to do with individual companies' performances, which is what I was saying before, that there's something else moving the stock. Some are saying that it's a good time to buy because they only see it as a correction, and some are saying that you should be patient and wait to see what happens before buying. Personally, I'm buying, but obviously not everything. Tesla's just ridiculous. Yesterday went up, I think, 12%. It closed the day yesterday at 294, so it went up 12%, while it was trading at 250 or 260 not long ago. All that just because a guy who was short selling or was saying bad things about Tesla, was going against Tesla, all of a sudden bought Tesla shares and totally believes in Tesla all of a sudden, and believes that they are destroying the competition and that they will hit great numbers. So just because some guy decided that he's going long on Tesla, the stock moves up. So I'm not even sure if that's the real reason, but that's the reason that's given on CNBC and in the news. But yeah, Tesla is up 12% just because some guy decided to go long on Tesla, and just because that same guy was bashing Tesla. And in pre-market today, it's also up 3%. So this Tesla is a dream stock for day traders and swing traders. So apparently the winning lottery ticket was found or was sold in South Carolina, the 1.6 billion mega jackpot. 1.6 billion was sold in South Carolina. So someone has won the lottery but hasn't claimed it yet. This is ridiculous, winning 1.6 billion. Of course, the winner's not going to get 1.6 billion up front. If he wants the cash up front, it's going to be about 877 million, and that's still going to be taxed at about an extra 40%. So he's probably going to get, the winner's probably going to get half of the 1.6 billion lottery ticket. They also have the option to get it in annual payments. If I were in the winner's position, I would definitely take it up front. And remember, I made a video on what I would do if I had $1 million. In that case, I would put it all in stocks. But if I had $800 million, it would be a different scenario. I would definitely diversify and put some in real estate for sure. Buy a bunch of homes and duplexes and triplexes and maybe even condos and just rent them out. But by always putting only 5 or 20% down payment and having the tenant pay down the mortgage. But then I'll be able to do it on a bigger scale. And obviously the rest would be in the stock market combination of it's mostly going to be dividend stocks. I wouldn't be looking for capital gains. I'd be looking for stocks that pay dividends, because in this situation, I'd be happy with 4% return per year. 4% on $500 million per year is sufficient enough. And obviously I would be living off the gains, living off the dividends. So this is interesting to see who's going to be the winner, what's going to happen. Everyone's going to be his friend all of a sudden. Now, Bank of Canada might raise the interest rate for mortgages or just for loans in general. So that could affect people that have more variable rate mortgages like I do. And it's really annoying me because they've raised it 4 times since I've had my mortgage. And I think my payment has increased $130 almost since they increased it 4 times. And they might increase it again today. We're going to find out. That's really annoying. I don't understand why they're doing that. They're just making it harder for people to pay their mortgage. What's the point? I mean, if the economy's good, why try to ruin it? Why make it harder for people to pay their mortgages? Why make it harder for people to qualify for mortgages? If the interest rates are higher, it's going to be harder to get approved for a mortgage. So that means house prices are going to decline. So unless they're trying to control house prices this way, maybe that's why they're increasing it. But at the same time, they're hurting people that already have the mortgages or people that want to get mortgages, so then they're forced to rent instead of buying, which buying is obviously better than renting. So that's something that's really pissing me off right now. We'll see what happens today. I don't understand why they're doing it. So good news in the stock market is Barclays, a stock that I bought at 9, posted really good earnings. They posted a billion in earnings versus expected 750 million. So that's like almost 33% more than what was expected. So that's considered very good. But the stock pre-market isn't going up that much. It's only up 2% pre-market. So it's not that great. So I don't think I'll be able to sell it because it's still trading at 8.82. I bought it at 9. But definitely if it goes to like $10 today or something, I'll definitely sell it. Although it pays good dividends, but I'd rather sell it and move on. So Ford is releasing their earnings today. So I'm curious to see what's going to happen. It's trading right now at 8.55. I'm expecting good results, or I'm expecting the stock to go up regardless after earnings. I don't think it can handle to go any lower. So I think for whatever reason it's going to go up today. We'll see. So lots of stocks reached 52-week lows today, including Citigroup. It reached 63, being a 52-week low, but right now it's trading at 65. 52-week high was 80. Pays about 2% dividends right now. Bank of America traded near the 52-week low yesterday, reaching 26, while the 52-week low was 25. Trading right now at 27. Pays 2% dividends, so not that much. But the one-year target price is 34, and this is definitely a stock on Warren Buffett's list. So Vermillion Energy, this is a stock provided by a subscriber. I looked it up. It looks very good in terms of dividends, 7% dividends. Also, the chart looks really good. It's at a 52-week low. Yahoo Finance gives it a one-year target price of 56, and it's trading right now at 37. So chart-wise, it looks good. Dividends looks really good, and it's very consistent in dividends. It's a oil and gas company in Calgary. It's got a $5 billion market cap. It's pretty known in Calgary. Personally, I didn't know it, but in Calgary, it's a popular company. So revenue has been declining a bit for the past 4 years. So that's probably what explains the drop in the stock price. And they lost money in 2016 and 2015, but they're profitable in 2017. Their balance sheet looks good. They have way more assets than they have liabilities, but they have more short-term debt than they have short-term assets. So probably that's probably another reason why the stock is dropping. They've missed some earnings, also some estimates. So that would explain why the stock is dropping, but at the current price, it looks good. Even Yahoo Finance gives it not a strong buy recommendation, but gives it a buy recommendation and a 12-month target price of 56. Plus with the dividends being almost 8%, it looks like a good buy. Now AT&T, this is a stock I bought a long time ago at 32. It's been trading horizontally for a very long time. Yesterday it closed at 33, but it looks like pre-market is dropping 3% because they missed earnings. So that's just great. But at least it pays dividends, so I'm gonna keep holding on to it until it goes back up and I can sell at a capital gain. And while I'm waiting, I'm collecting dividends. But this is one of the biggest telecom in the States, so I've got really nothing to worry about. Well, I'm really glad I didn't buy eBay. I was gonna buy the stock at 34 or 33 point something, and it has dropped to 28, and it doesn't even pay dividends. So I'm really glad I didn't buy the stock. Although Yahoo gives it a 12-month target price of 41, I really don't know what's going on with this stock. I don't know if Amazon is taking over and maybe eBay can't compete anymore because people are selling mostly on Amazon than eBay, and people are buying more from Amazon than eBay as well. Although eBay still has its market, but it's not as big as before maybe, and probably that's why the stock is dropping. If we look at financials for eBay, revenue is still pretty good at $7 billion in 2017, slight increase from 2016, but they lost money last year. Looks like their biggest expense last year was income taxes. So it looks like a disorganization from the accountants in the company, because so their profit is a little messed up, because in 2016 they made $7 billion profit, while in 2017 they lost $1 billion profit, $1 billion. So it looks like just a reorganization or an allocation of income tax expense. That's really the biggest difference between 2016 and 2017. So can't really say that they're losing money, because making $7 billion profit is very good. Even if you split it up between 2016 and 2017, you're making $3 billion profit. So numbers aren't bad. So I don't understand why the stock is dropping, but I'm just glad I didn't buy it at 34, because I'd be very disappointed right now, especially not collecting dividends. But it could be a good stock for people who still believe in eBay and think that there's still a market for eBay. I think there is, but definitely Amazon is taking a big market share. Capital One Financial also looks good right now. Pre-market is up 4%, but yesterday was trading at 87. I think it was a 52-week low yesterday. Yeah, it was close. Yeah, it was close. Yeah, it was a 52-week low yesterday of 85, but it closed at 87, and today's pre-market is 90. But the one-year target price on this is $114, and it pays 1.81% dividends. So it's a good long-term stock for sure. Dividends are not high, but capital gain potential is good. And obviously it's a big bank in the States and even in Canada. And personally, I love their products. I love their credit cards. Groupon looks really good also. It's at a 52-week low. 52-week high was $6. Doesn't pay any dividends though, but in terms of capital gain potential, it's there. So if you believe in Groupon and their business model, it could be a good purchase. If you look at financials, I mean, revenue is stable. They're at the 3 billion range, and profit is very low. Yeah, so they're making very little profit. They're making 14 million. Last year they made 14 million, and the year before they lost money. They lost 194 million last year, in 2016, sorry. So yeah, so revenue is steady, and their profit is all over. Their profit or their net income is all over the place. But so it depends on if you really believe in their business model. But chart-wise, it does look good. And Yahoo Finance gives it a $5 12-month target price. And they give it a hold recommendation, not a buy recommendation. So yeah, dividend 15 split corp dropped hard yesterday, but it closed at 8.71. And I'm very disappointed I didn't sell it when it was trading at 9.4. I was making 16% gain, but definitely if it comes back up again, I will sell. Although while I'm waiting, I'll be collecting 10 cents per share every month. But I think I'm gonna try to sell it at $10. But I was definitely disappointed that it almost came close to the price that I bought it at. So that's why I can't handle holding a stock long term, because it's just my personality. Watching profits disappear like that would really piss me off. I'd rather confirm some profits than just watch profits come and go, and wait 5 or 10 years just to compensate everything. That's just not my personality. I don't have that patience. Alright, so this was a quick review of the stock market yesterday and today. Hopefully Ford goes up today and Barclays goes up even higher. So if you have any questions, leave them in the comments. If you're gonna open an account with Questrade, use my referral code in the description below the video. So you can get between $25 and $250. Thanks for watching.